Are you thinking about buying or selling a home with a family member or maybe someone else that you know? It seems like a smart, simple move that'll help you buy a home sooner, but it's not your typical real estate deal. You see, when family and real estate mix, it's what lenders call a non-arm's length transaction. And while it's perfectly legal, it can raise a few red flags. First, let's cover what a non-arm's length transaction is. It's any real estate deal where the buyer and the seller have a pre-existing personal or business relationship. It's common in situations like parents selling to children, one sibling buying from another, or employers selling property to employees. The key difference in this type of transaction is that the relationship could influence the terms of the sale, like offering a discount, skipping inspections, or even attempts to fraudulently inflate the home price. Here's why lenders scrutinize these deals. First, let's look at a regular transaction. If the buyer doesn't know the home seller, they have no reason to adjust the terms of sale. They will sell it at market terms. But when two parties know each other, lenders worry about inflated prices, fake down payments, or sweetheart deals meant to help the buyer qualify for a larger loan. To prevent fraud, lenders require extra documentation and oversight to make sure the sale is legitimate, the price reflects fair market value, and no rules are being bent behind the scenes. So what's different about these transactions? Due to these and other risks, expect stricter underwriting and a longer approval process. Your lender may require a second appraisal to verify the home's value, a gift letter if a gift of equity or actual funds are being exchanged, documentation proving the relationship between the buyer and the seller, a neutral third party to help facilitate negotiations, and here's a big one. For FHA loans, the minimum down payment increases from 3.5% to 15%. These loans aren't without pitfalls. If the lender sees anything that looks suspicious or poorly documented, your loan could be denied. Also, if the home is sold well below market value, there could be tax implications for the seller, and those rules vary depending on the amount and the location. FHA and VA loans have special rules for these types of sales, so it's important to work with a lender familiar with these guidelines. Here are a few tips for navigating a non-arm's length transaction that'll help keep the deal on track. Be upfront with your lender from the very beginning. Allow the lender to hire an independent appraiser to confirm market value. And work with a real estate agent or an attorney who understands these transactions. Non-arm's length transactions aren't unusual, but they do come with extra strings attached. Whether you're buying from your parents or selling to a sibling, make sure everything is documented, compliant, and above board. For more tips on navigating unique mortgage scenarios, visit mortgageresearch.com. And if this video helped clarify a tricky topic, give it a like, subscribe to the channel, and hit the notification bell so you don't miss the next one. And if you have questions about your specific situation, drop them in the comments. We're here to help. Thanks so much for watching, and good luck with your home buying journey, no matter who's on the other side of the deal.